there is a sponsor of this channel. It's Bybit. The links are below. As a reminder, Bybit is fully KYC now. So unless you can qualify those geographic requirements, those residency requirements, you can't trade on Bybit. So if you're in the United States, you can't trade on Bybit. If you can qualify, there are some nice bonuses you can take advantage of to reduce some of your trading fees. Because again, it's not a free lunch. You can't just sign up and then take the bonus. Essentially helps you out with your trading fees depending on the volume that you trade. All right, guys, what's going on? It is Tuesday, October 3rd, and I called a little bit of an audible. So I was going to stream tonight, and then last minute I put out a post asking what people prefer, 1 hour long live streams or 15 to 30 minute recorded updates. And clearly there is a winner within this. Now, the streams are good because the streams allow for active participation by the audience, asking questions, AMA, Q&A type of stuff. But still, by the time that I get to the end of the stream when it would be appropriate to sort of look back and answer questions, again, we're like an hour in and I don't even get to everybody's question. And a lot of the times it's so casual, the stream, that I think that some of the content could be better served being compressed, being edited, and I think it'll just be more actionable that way. And it is nice to change things up from time to time. So that's what I'm going to be doing. So what I'm going to be doing with these videos is after each video, any questions that you leave in the comment section, I will answer in the next video at the end of that video. So each video will have a dedicated AMA session answering questions from the prior video. And these don't have to be trading related questions. They could be questions about anything under the sun. We're going to be doing that for a little bit. I'll do the streams again. You know, I'll do them at some point. I might throw them in maybe once every 2 weeks or once a week. I don't know. Right now, I'm going to go with this and see how you guys respond to this. Again, there's an overwhelming majority of you who would prefer the shorter form content. So in this video, I do have to remind you that none of this is financial advice, strictly for entertainment purposes only. So talk a little bit about current events, and then we're just going to get into it. And I have to tell you, we're going to be looking at BTC. We're going to be looking at ETH. We're going to be looking at legacy briefly. I'm not really going to touch on alts. I don't think that anyone should really focus too much on alts right now, honestly. I think there's not really anything going on. There's a few things going on here and there. There's some weird behavior by some very well-known market makers now that are not necessarily very market maker-ish in terms of what that role usually implies. I don't think there's anything in alts right now, honestly. And to be honest, I see a lot of people talking about all the alts that they're going to pick up for next cycle, and they're building their bags, 10, 20, 30 alts. I think you're absolutely insane if you think that that's going to pay off. You might hit one lottery ticket, but I think by and large, the majority of the people that do that, diversification in that sense is diversification, right? You're going to end up maybe just above break even if you have one banger and then you end up buying a bunch of vapor. Just to give you my opinion, which I do all the time anyway. But if we are looking at another cycle of BTC and ETH appreciating a lot, right? And a lot could be anything. It could be 100% from here. It could be 50% from here. I don't know. If we're looking at the having a positive effect in terms of narrative and expectations and prices being higher into 2024, which I think they definitely will be, I think there's a very significant chance. I think I'm very confident, I should say, that by the end of 2024, prices are significantly higher than where they are right now. I'm not necessarily sure what the exact price point is. So I'm confident about direction. I'm not confident about the exact price. But I do think that we'll see this sort of wealth effect that benefits alts. But I think that by then we'll actually have a bunch of new alts. You know, there will be the darlings of the last cycle that benefit again. You know, I think maybe Solana, but there's probably some others, but it's just, that's not my area of competence. And I don't think that it's worth actually focusing on that too much right now. There was a period where on-chain was popping off, but then if you looked at it, there was like nothing going on actually. It was very sparse, and honestly, the volume wasn't even there. There's like people talking about like coins that have $1, $2 million in 24-hour volume, and then their liquidity is like half of that. So it's, again, everyone's aware of what part of the cycle we're in right now, how the crypto market has been for the last few months, and I don't really see that changing anytime in the near future. There's been some interesting things, obviously. So there's obviously been a ton of talk about ETFs. The ETFs, in my opinion, are going to get pushed to the maximum in terms of their final deadline. So I don't think you're going to see an approval by the end of 2024. I think there's been some specialists in that area that have gained a ton of popularity talking about the Bitcoin ETFs. I can't think of their names right now on Twitter, but all they've done is talk them up. And with each month that's passed, we've had them kick the can down the road, and I think we've seen delay after delay, and we can anticipate that'll likely continue. So In my opinion, it goes to the end, which is, the final deadline in March for almost all of them. In other news, there was the ETH futures ETF, which is a whole lot of nothing. Futures ETF is kind of irrelevant. I mean, there's other exchange traded products. There are the CME futures that TradFi portfolio managers and funds and just people that are more comfortable in that marketplace can gain access to get that exposure. Now, obviously, the CME futures, they're trading contango. You're going to be rolling up the curve. You pay that roll yield. So that's not as attractive as having an ETF. But when we talk about an ETF and benefits of an ETF, we're talking about spot ETFs and them actually having a positive impact on the underlying market. So the VanEck Ethereum strategy ETF, you look at the total net assets. And the volume the first day, which was yesterday, was I think it was sub $2 million, that falls outside of the top 200 cryptocurrencies by market cap. If you weight them by market cap and look at 24-hour volume, that wouldn't even be in the top 200. And we're talking about things that are in that are just vapor, right? They're ghost projects and ghost chains, and they're non-existent anymore. But this traded less than those. So it was something that people were buying in anticipation of, I guess, continuation, but it's almost always buy the rumor and sell the news. So not surprised by this. Market isn't even really that confident. I mean, if you look at, and again, shout out to Synquote as well. I'm on the Synquote team. Synquote is a decentralized options platform. This is like a Robinhood, essentially. I think that during the next bull market into the next cycle, this is going to benefit tremendously. Objectively speaking, it has more volume, does more volume than any other options DEX. They also don't use AMMs, so that it is RFQ. So you are dealing with options market makers and getting quotes instantaneously, not an AMM, not a position that could get caught in a one-sided market and have trouble on those AMM platforms. So if you look at just Ethereum at the end of this month, and we just look at Delta as a rough approximation of probability, just look at like the 2K strike, the 1800 strike, and we're talking 5%, sub 1 in 5 chance, 17%. Again, rough approximation of probability at that level trades, but it was a whole lot of nothing. Right, a bag of hot air, more or less. So the real important things are the spot ETF, which I think will be very significant. Right, I think that these are things that will be big. These are things that are more important for in the short term. These narratives are good leading up, but they're more important longer term. It just means the market's getting, more recognition. There's more access to it, and there are still people that don't want to access this market in the very easy way that exists right now. And they're portfolio managers that won't touch things yet. And I think the BlackRock ETF would be sort of, if we get the BlackRock ETF and nothing comes of that, I think then we have trouble, but I can't see that being the case. I think it'll line up with the most popular narrative in this market, which is a narrative dominated market, and that is the halving, which is more about expectations than anything else. So let's take a look at BTC. Take a look high time frame down to low time frame. These, again, I want to keep these short and sweet, but actionable, but able to serve more or less anybody and still be green. So if this releases tomorrow, I still want it to be relevant. So in terms of high time frame, I think 30K is going to be doing its job for a while. I ended up selling this yesterday. I probably got out of that too early. I was anticipating more of a bounce again to re-enter. But to be fair, I might actually just reshort this and leave some orders above. I think that it's very likely that this trades back down sort of through 25 into 24.5 region again. This level right here is obviously the most significant level on the chart. I think if we're cleanly above 30K again and we're sitting above this high time frame resistance, I don't think you could second guess it at that point. I mean, you're re-accepting back within this very significant range. You can see these kind of carve outs, how we've behaved before when we've, returned to them. In this case, it is very sticky. The underside of it acting as a very clear resistance. And the opposite of that is if we are able to trade back up through that level. This market is really reflexive. It is very momentum driven. And I think that you would sort of perk everyone's attention up if we trade back through that level. And to be fair, I don't think it's even necessarily that you have to trade above 33 at this point. I think if we're starting to trade again back above 30, you see signs of acceptance there. I think it's very unlikely that you get the 3 rejections, right? So you have something where the market trades back above this level, is kind of sitting above here, and then ends up, failing and then breaking back down. It's possible, right? In any market. But my point is, I don't even think that that's going to happen. I think that that's less likely than this being a clear rejection of a significant weekly level. So if this is the weekly chart, this is the beginning of the week right now, beginning of the month, there's a chance the monthly high is in, right? I think that this level is doing its job. So it's sort of that 28.5, 29 level. I talked about this a couple streams ago, selling that level. Sure enough, it took us a while to get back there. We came back twice. But I could see us chopping around here and then returning, trading back through this range. I mean, if you look at market structure on the high time frame, if you look at this weekly, or rather we'll just look at the monthly, I mean, we had a range down here, broke out of that range, forming a new range on top of that structure. So we have a wide range of prices to trade. We're more or less smack in the middle of that right now. But I do think that it's an instance where I would be willing to sort of, again, diddle in the middle, is the common phrase, in that we're probably, in my opinion, going to return back to these lows. I don't think it's going to follow like that. I think you could get something that spikes up, put in a sort of longer term, maybe a couple weeks, couple days at least, a lower high in this region, but it is sort of a lower high to what I think ultimately is a lower low in the making. I'd be very surprised if this market continued to rip up from here. And one of the reasons is because what's taking place in legacy markets. And I don't think that this market is completely broken free of the shackles of legacy markets. I think the lower time frame correlations have been more or less weakened. But I think if you have big moves in legacy, you're going to have corresponding moves in crypto. Unless you're talking about alts where there's nothing taking place, right? Just bots trading. But this is the weekly chart for BTC. So the level that's acting as resistance was this prior range low, or if we look at sort of the top retest of that 30K level where price consolidated, we're retesting the underside of that structure right now. So no surprise there, that level is doing its job. If we look at the market over the last few days leading up to this, so going back into the last couple of weeks, where we spent the bulk of our time, and you can see there's a really clear carve out between just under 27 and going down to 25.5. Now, I think if you're trading back below there, yeah, it's more or less a sure shot, right? So trading back below 27, you're probably going to retag that POC around 26.1, and then we'll start dealing with these 25 lows again. But I think if you get something that spikes up here, right? So rather than waiting to sell sort of something like this that trades back below this high and is finding resistance there, I think if we do get another spike here, I'm kind of torn what I want to do. Another spike here, we have some kind of lower high, and you look for that failure. I think that I'd be willing to get much more aggressive if we have something like that, anticipating that this kind of just begins to melt down at that point. Again, it's the beginning of the week. We have 5 days left in the week. It's the beginning of the month. A whole lot can change. But high time frame, I think that this market is still kind of reflecting a lot of confidence about ETFs being approved. And I think that it's still trading heavy. And the only buyers are probably up here. The more significant buyers recently have been sellers. So, I mean, you had hedges close out over the weekend. I can imagine there's a good amount of hedges due to the government shutdown. Futures open on Sunday. We have a really nice spike up. But all we've had is basically these very crowded moves occur. And it's always, like I say, start paying attention around 10K BTC. So this is Velo, and this is taking a second to load. But you'll see, like, when you have a really sharp move, so in a really short amount of time, this is not loading, a really short amount of time, you have, 10K BTC tagged on in the futures market, and the spot market isn't really doing anything. That's a bad sign, right? That's a bad sign. A lot of times we've had that. So this is a custom indicator that my friend Mood had made. And this is another one. This is cumulative relative volume. So showing me session volume that's cumulative for that day. So we have light blue as the New York session. But what you see is, you have a sharp move up by price. So particularly right here is a good example. Sharp move up by price right here as well. 10K BTC added, right? No follow through, no spot follow through. And then the market just starts trading back against that risk. And, more or less what's happened for the last few months just continues to happen. Crowding in position, anticipation, continuation, no spot follow through, and then the market just kind of rolls over back on top of itself. We'll see if that Velo is going to actually load this time. Yeah, there we go. So just pointing out some of the more extreme examples. So this was a very extreme example over the course of a few hours, big pickup, but for smaller moves. So this move right here, big pickup, again, right around 10K BTC into resistance. There's really nothing changing. You can see price is kind of finding a range in terms of the level of exhaustion and crowding that I talked about that you could sort of glean from open interest. It's exhausted and one side has been taken out when the open interest is ranging and it's back at range lows, or it finds extremes. And when it's at the high of those extremes and it's into a level that's been resistance, a lot of times that's been pretty good sign that things are getting crowded again. It's if the spot market is not following through, right? So in terms of the daily, we're starting off with an inside day right now, but obviously we 23 hours left in the day, so there's really not a whole lot we could take from that. But just market structure wise, if you were to look at this as sort of a swing failure, I think that it's clear that midpoint of the range 26.3, 25.5 are all on the table from here. If we can't continue to press upward from here, again, not what I think is going to happen. If we can't undo this resistance at weekly level, then we're just going to start testing out those lows again. Again, no real follow through right now. Momentum's kind of dry and market is dry as a whole. So if it ain't going up, I think this market just begins to move lower. If we look at just the last couple of days, we'll just look at the TPO chart. Let me get rid of this chart book real quick. Just look at the TPO chart. Yeah, there's a couple things that stand out. I mean, yesterday we have closed with a poor high, right? So we have a poor high. So that would be this level right here. We have kind of a ledge up here. So again, I think that you do get it's possible we do get sort of a spike up. So you have a clear rejection up here, a bunch of crowding, market marks down, and then we don't get continuation. Instead, we have kind of beginnings of possible balance forming. I could see something like this happening, where we get another day of balance down here. Market breaks through that balance, attempts to retest higher, and then we have some kind of lower high below that POC from the second, right? And that was the ETH ETF day. So I could see some kind of lower high in that region. And I would say anything that begins to lose momentum up here and roll over and does not continue to hold something like yesterday's highs and start trading back through value is a good short at that point. I just think the roll is, I don't want to say inevitable, but I think it is setting up. I wouldn't get overly aggressive here, though. I don't know if you just get sort of this situation where we're opening up 24-hour market. So right around POC, beginning to pick up, and then we continue to just roll lower. I don't think that that's the case. So I would anticipate spending a little bit of time up here. In terms of just prices below us that we could find some level of stickiness, that POC, naked POC right around 26.9, right? That stands out. And then you have sort of this low volume region below that. So between 26.8 down to 26.5 area. I think that what goes down there might give us some kind of quick wick and response. But if we begin to trade back below that level, so if we're beginning to accept, you can see corresponding highs right around 27.2, 27.3, sort of where we are right now. If we're starting to trade back within this structure, I'm looking at it as first sticky points rather than turning points. So first sticky point, right? So naked POC, and then continue to just see if we either begin to base out, which I think would be unlikely if we end up trading back in that, or end up cleaning out these much lower structures. So you have a gap all the way back here. And again, the price that I'm anticipating is coming back down to 25. But again, intraday, I mean, maybe we get something that, you know, you have a clean low at this point, yesterday's lows. Maybe we get something that starts to base out. If we begin to show some kind of structure here and you have some level of absorption. So if we look at the CVD for a second, some level of absorption right now, which I think is reasonable because the market expects this to just move lower, and instead we're basing out. So again, I think you could have some kind of base like this that forms, and then we end up putting in a lower high. There has been a lot of selling, and there hasn't been necessarily that much follow through in the last 24 hours. So if we look at just this on the lower time frame, look at like a 10-minute chart. So here is our last 2 days, and it's not something that is dramatic, right? But relatively equal lows. It's not like price has done much to move lower, and CVD is just a little bit sharper, right? So it stands out just a little bit more. This is a little bit more gradual than this. So it's been a lot of selling and not necessarily as much reward in terms of lower prices. So I would just be careful. I think this possibly sets up for a trap. If we look at yesterday's highs, so yesterday's highs right here, poor highs, like a lot of times momentum rollover, just no clear rejection. So getting something that returns to this level cleans it up. So look for either acceptance through 26.7 or some kind of absorption there. Because again, if we're going to be rotating here and basing out over the next, or balancing out over the next day, it would make sense for us to clean this high up, see some kind of absorption up here, and then we start trading back through this, and we trade more or less through between 27.7 and 27.100. So again, there's not a whole lot to get excited about with either BTC or ETH. Going to ETH, not really exciting at all since the ETF approval. Not strong against BTC, nothing like that. ETH high time frame is worse than BTC, right? It's underperformed BTC. Market structure in a clear downtrend, at least locally, over the last few quarters, right? A much clearer downtrend than BTC, whereas BTC is, you know, still in a range moving sideways. Again, This has been weaker. I anticipate this will continue to be weaker. I don't see any real reason for this to change. The thing that stands out about ETH, right, is all of this space, right? All of that space, it's more or less, all of that space would be like us reaccepting back within this gap. I think BTC has a little bit more in front of it though at that point, right? Whereas with ETH, like below 15, and there's not a whole lot, right? It's not a whole lot of action that we've had there. I mean, what I could see is this sort of gap trading. So below 15, down below 15.33, down, 100 points to 14.26, and then maybe that low would be where we would get a response. But as far as it goes right now, like ETH's just weaker compared to BTC, and BTC already sucks as it is. So it's like, do you really want to trade these markets right now? There's not a whole lot of meat on the bone. Intraday, no matter how you look at it. I mean, if we looked at ETH and BTC and we were to put on like yearly VWAPs, I guess I'll give you a holistic, whole big picture view. We're trading right at yearly VWAP right now, right above it, but underneath that first standard deviation band. ETH is worse, so below yearly VWAP, retested that lower standard deviation band right now. So clearly it's just an indication that it is much weaker than BTC. Now we're looking at right here. So I just put on a couple more profiles. These are the monthly profiles that you're seeing in blue. So the month of August, we had that sort of double distribution structure, cleaned up that gap. Now a lot of times if you have a gap clean like this, right, and then you don't get continuation down, you're able to trade back within this range. If we start rotating higher, I just look at this as a similar situation to this gap right here. So you have a liquidation structure right here. It's more than likely if you're going to start ticking higher and you're unable to trade lower after, especially after something like this, you're going to trade back toward this extreme. In this case, we had one move and then two moves. Now we have some kind of swing failure. But more or less, we're just cleaning up this August gap. So, this level, as you can see, barely traded. Previously, we cut a bunch through there, and now it looks like we're doing this again, but on the right side of the structure. So wouldn't get overly excited. We're just cleaning out these prices. It's already been more or less used up though. So the more we move sideways through here, the less likely we could say that this kind of rips from one extreme to the other. Again, I already went over BTC, so I don't want to beat a dead horse. As far as ES goes, so now we just have the monthly profiles on. I've been talking about 42.50 for quite some time now. So if we look at the SPX, we ended up returning back to that level, but it's a really long range that we were dealing with. Sub 42.50, sub 42. So going on, we're going on almost a year of that acting as resistance. So we had a really clean move through that. We had a really long period of markets showing strength, obviously carried by just a few. Market breadth not doing all that well. Big push in AI that I think, again, got a little bit ahead of itself. Same thing I've said multiple times, Gartner hype cycle. So it is not even the beginning of an AI bubble yet, though. We're just seeing a little bit of that, I think. So this is going to be the first major retest. That's what it looks like, in my opinion. It's 42.50 for me, but I don't think that means that you can't go below 42 and have, again, this be a great area to look for contextual risk reward in terms of longs. This area has to hold. So we're talking about the S&P, not some, trivial shitcoin or fickle shitcoin. So if anything, what this means is you spend some time down here. So I don't know what that looks like right now, but if we get some kind of base forming, so let's say we spike through, tap 41, we're trading within here for a couple weeks, and then we have a platform, we're starting to trade higher. I think that's probably it. I don't think that, it doesn't mean that's it for good, but I don't think I would continue to be overly bearish at that point. Would be worrying is if the markets, continues to move rapidly, VIX is above 20, and we kind of cut through this level like butter, which is not out of the question considering the way rates are behaving as of late. It's starting to get, the behavior we're seeing is ominous and foreboding, if anything. We're doing things that usually precede things breaking in markets, and this can happen. Things can go to 0 to 60 very quickly. I don't know. I don't want to write this off right now. We're still above it. This could be the best buying opportunity for a long time. I think we have a little bit of work first. I don't think this is something that does a V reversal, just the way things are headed right now. But I do think if we move down gradually and we're chopping, I think that's good for BTC and that's fine. I think the correlation it's always going to come back, but it matters how fast things move, right? So when markets are moving, putting in multi-standard deviation moves, 2, 3, 4 plus sigma moves, then all correlations go to 1 at that point. But if we're just chopping around, and we're kind of gradually approaching a significant level. You probably see that get front ran in risk. I've seen this many times before where SPX, the indices are approaching a significant support level and you start seeing risk take off in anticipation of a response by those benchmarks. So I'd keep an eye out for that. If things get really ugly though, they're going to get really ugly for BTC. It just goes without saying. It's not gone forever. It's okay right now. But if the S&P continues to gradually reapproach that level, I'm not overly worried about BTC. I don't want to micromanage this. Again, I think that if you look at right now and take a snapshot, I think we're going to see lower prices again. And that means 25, that could mean 23, that could mean 24. Those levels don't scare me though, right? Those levels don't scare me. What would worry me is if we're trading back within this range and there's no sign of support, there's no sign of life in equities, and we're in a really ugly situation across the board. But either way, I think that big picture, this is more or less following like past cycles very closely. So I think there's a lot of symmetry between previous cycles to where we are right now. And I think that's something reasonable, right? Markets move off the anticipation of things, and the halving is a very significant narrative in this market, or expectations. What I could expect is, what I think is reasonable to expect rather, is like, it wouldn't be odd for the market to just kind of trade within a range, a wide range, maybe returning back down to this level and testing it a couple times and trading within the structure for the next few months, right? Going into 2024, maybe even Q2 2024. That would still be following the prior cycles in terms of approach and the amount of time it took. So we're still kind of early in terms of where we were previous cycles with respect to halving and corrections. I think this follows for a couple of reasons. I think one of them is honestly just that's how long it takes for this market to wash out excess. So I think there's some kind of footprint of that, some kind of pattern that is notable there. So high time frame doesn't look broken right now, but it's just not very inspiring. If we're above, like I said, if we're above 30 cleanly, different story, right? As far as alts, like again, I don't think there's really, if you look at alts, if we just look at total 1 minus total 2 minus like USDT minus USDC, so alts, BTC, ETH minus stables. So I'm having a brain fart right now. Let's go to total 3. Best example. Alts are doing nothing. So again, no real reason to pay too much attention. I mean, I think honestly with alts, what you can do, said this many times before. One, you could look at the stablecoin market caps. It's not going to be the best indicator, but there's no real new money coming in right now. But if you want to apply like some kind of high time frame trend following, so 50 moving average on the weekly, above the 50, putting in some kind of market structure change, so whether that's above this high and then above the 50 and we're beginning to base out and trade above the range we're creating, and you're late at that point, but the point is it's an objective measure of things, right? It gives you some clean perspective at that point. So I don't think there's a whole reason, I don't think there's really any reason to go over alts. I'm not excited about them whatsoever, and I think markets are in a place right now where I'm a little iffy because of how treasuries are trading. If you look at more specifically, like if you look at the 30-year today, I mean the 30-year is ripping. Okay, so I think that we're getting to the point where something's got to give, and it isn't good. And I think even if you had rates, like let's say they cut rates at this point, which is, I just doubt it, I think markets would really suffer in the period shortly thereafter that as well. I don't think we're in a good position. Big picture wise, I think that there's a little bit of pain ahead, but that's like the next couple months. I'm not thinking into election season, election cycle, and into 2024. I just, we're talking about crypto. It's like everyone is really myopic and short-term oriented, so it's easy to sort of get stuck in that language. So I think that's more or less everything I wanted to go over. Again, leave questions in the comment section below, and I will make sure to go ahead and answer them. I want to double check. Is there anything that stands out? No, I talked about open interest. If we look at just the futures market, I mean, quarterlies are still relatively elevated, so you'd want to see these come down a bit more. I think that this market, again, positioned in anticipation of seeing some kind of positive outcome with the ETFs this year, and I don't think we're going to get that. So I think there's a little bit of positioning that is willing to buy lower. So if we do get a little slippery, I wouldn't be surprised if 23 traded, if 22 traded, because there is still some exposure there that hasn't come off as much as I think. Historically, you'd have these trade in backwardation. I don't think you're going to get that. But even if we look at like the options market, if we look at skews, and again, this is inverse of a platform like Amber. So in Amber data, when I say negative skew, we're talking about puts trading more expensively. That would be positive skew here because of the calculation, whether or not it's puts minus calls. So that 25 delta, implied volatility of those 25 deltas. I don't want to get too far into this because I might be taken for granted that some people haven't heard me talk about this, but you're looking at whether or not the market is buying protection or not, whether it's optimistic or buying insurance. And it looks like right now people are starting to buy insurance, but still optimistic longer term. So you're starting to see that, again, puts trading more expensively in sort of the near-term contracts, the closer tenors, the weekly, the monthly, and then longer term is still optimistic. So calls are still trading more expensively than puts, which I think is something this market has always been characteristic of this market. But from a vol standpoint, there's nothing taking place. And we had a brief spike, but I don't know, all that could change because you look at the VIX. I think the VIX is, I don't know if it's still above 20. Yeah, briefly. Yeah, it could be trouble on the horizon. Don't want to jinx it. Don't want to say that at the bottom, but I don't know if that'd be jinxing it because everyone would be happy. But yeah, to wrap it up, I think 25K is likely to trade again. I think the 30K, anywhere between 28K and 30K selling, I think gets rewarded at least on a one-to-one basis. So we're not talking major trade, but it's just how confident I am that we're going to be trading through that low again. All right, guys. I think that's it. Leave some comments in the comment section below because I haven't done one of these in a while. So if I missed anything, if I should have gone over something, if the pace was off, or either way, any comment, any question, I'll get to it in the next video. All right. If you haven't subscribed, go ahead and hit the subscribe button and the like button, and I will see you guys next time.